A very great Thursday, the first business and markets day in the new year 2020. To all our viewers here in Nigeria and around the world, this is your business morning, kicking off the new year on this note. I am Bosin Omofai. Welcome to the program. President Buhari's New Year letter to Nigerians have drawn some criticisms than applause from what was contained in a very lengthy letter which was written to Nigerians, of course, appraising his administration. President Buhari admitted that the transition by its very nature carries with it change and some uncertainty along the way, but the president encourages Nigerians to be tolerant, law-abiding, and peace-loving. So, what is a summary of what the president says in his letter, which could be described as I pledge to Nigerians? First, the president spoke extensively in that letter completion of key roads, bridges, and rails initiative and the housing estate, talking to mass housing project for Nigerians. The fifth year of the administration is currently ongoing. Mr. President also spoke about that Nigerians should expect significant improvement in power supply, reliability, and delivery. However, this will come when he says after a 12-month period of extensive reforms that will take place within the power sector. Take note, after 12 months, that was what was contained in that letter. In other words, for reliable and steady power supply, Nigerians would have to wait a little into the new year. Meantime, in the oil and gas sector, Mr. President says there will be radical reform that will excite investors, improve governance within the oil and gas space, and protect more extensively the host communities and those who are in the oil area. In terms of media technology, speaking a little bit to freedom of speech, the rule of law, and the social media, Mr. President says he's seeking informed and mature debate that will reflect Nigeria's rights and responsibilities. But to very more critical economic and macroeconomic issues on the land border closure, President Buhari says we cannot allow our well-planned economic regeneration plans to be sabotaged. Mr. President says Nigeria has been a good neighbor to other countries within the sub-region, but the country's economic plans will not be allowed to be sabotaged. So, the border closure, which has been in place since August 22nd last year, will be removed when Mr. President says he's satisfied that adequate safeguards are in place. And speaking about the ravaged Northeast, Mr. President says there will be a new beginning for the Northeast. He says that will be created via the Northeast Development Commission, the NEDC, in partnership with local and foreign stakeholders. The speech also focused on increased agriculture production, rural mechanization for agriculture, livestock development, and the hiring of additional 50,000 extension workers. Mr. President also promised to continue his reforms in education, in healthcare, in water sanitation, what you call the basic HDI, the Human Development Index, and to build on social investment schemes by setting checks and balances for the social investment program. Of course, not Mr. President alone has been talking about the new year and what it holds for the country. The minister in charge of petroleum resources, the Minister of State, Timipre Silva, says the petroleum industry bill, or the PIB, is already at an advanced stage and is expected to be passed by the middle of the year 2020 by the legislature. On the diaspora front, the head of the Diaspora Commission, Abike Dabiri Erewa, says Nigeria plans to float a new diaspora trust fund as part of the new horizons for the agency in the new year. Meantime, Lagos State, Nigeria's largest economy, is in the debt market shopping for 100 billion naira. It is 63 of its 10-year program, infrastructure funding, with an indicative coupon of 11.75% to 12.25%. The SEC also has some new message for the new year, talking about the new decade and the agency embarking on a number of new programs that is geared towards taking the market to lofty heights. Meantime, insurance sector in Nigeria is giving a breather, 6 months extension from June this year to December to meet the new regulatory capital and business model classification. Meantime, listed investment bank UnitedCap issued an economic outlook yesterday, the 1st of January 2020, saying Nigeria needs what they call a coordinated and coherent policy framework. And what does it mean in summary? These are the highlights of what will be the focus of my conversation with Wale Olusi, who is the head of research at investment bank UnitedCap, is live to us this first trading day from the Nigerian Stock Exchange trading floor. Wale, good morning. It's good to see you on the show.
Good morning, Bosin. Happy New Year to you.
Great. Thank you so much. So break down this for us in summary, what this Nigeria economic outlook, of course, you had a bit of a global input there, but again, in summary, the bottom line is Nigeria. What's it in summary?
Well, thank you for having me, Bosin, and again, Happy New Year to you and, of course, Nigerians. In summary, I mean, what we are seeing is a situation where the Nigerian economy will continue on a gradual uptick. And of course, this macro outlook is resting on a framework of the sets of policies that both the fiscal arm of the Nigerian government and the central bank have, put in place, or they have set in motion as of last year, to be able to implement the budget. I mean, we all heard what the president said yesterday during his New Year speech. The budget will return back to a January to a December calendar month, which is, unprecedented. I mean, is laudable. And again, we've reviewed some of our tax laws. We are reviewing some of our revenue so that we will be able to, support the budget. And the central bank on its part is, carrying out something that is completely unconventional in a way that will increase system liquidity or money supply in the system, as well as the market rate of interest. We think the combination of these two things, they are well intended, although they need a little bit of coordination. They will be able to help the Nigeria to continue on a gradual path of growth. But we may not be able to revert back to a situation where we are growing at 5-6% because of a few structural issues here and there. On inflation, we think that will still be elevated because of issues that the president mentioned yesterday. Border closure is positive for the economy because, higher prices will also be benefited by local producers. But what it means is that, if you combine that with the fact that there's a lot of liquidity in the system, both core and food inflation sub-indices will remain under pressure. And we are thinking that will give us an average inflation rate of about 11.9% in 2020 versus 11.5 or 11.4 in 2019. We think the MPR will probably be left unchanged or reduced slightly, and the CBN will continue to maintain its unorthodox policy framework, to manage system liquidity, to manage market rate. But we think yield on financial market instruments will remain very, very low, particularly for treasury bills. We think that will remain between the mid-single-digit levels and the probably high single-digit level, depending on the liquidity in the system. But for bond yields, you are probably going to be having 10 to 11.5% bond yield in 2020. Because the central bank has begun to, fast forward the size of the OMO issuances, and of course the NTB issuance will begin to see, they are looking at 1 year. We might see liquidity in the system, keep rates low up until the second half of the year. Or let's give it August. But from August forward, we are not sure how everything will play out. So we think the yield curve might revert back to a flattish framework compared to a normalized upward sloping that we have going forward. But on a whole, we think 2020 should be a better year for Nigeria, but we need a more ambitious policy framework. Perhaps some of the things that the Minister of Petroleum is saying, like passage of the PIGB, might be the trick that will work, because a lot of people are also concerned about exchange rate. But we don't think that will change much, at least for the next 6 to 7 months, because we think with this whole revenue thing, the CBN might still be able to, hold on the naira at current level until there's a need to adjust it. And even at that, what we are probably going to see is an harmonization of exchange rates, and not, a big devaluation that might affect the I&E window the way we have been hearing it. We think what will happen is a situation where you bring the official rate and the I&E window, which is a proxy for the market rate, to something close to each other. Boasen.
Wale, in terms of, well, you've provided us this broad background to it, but again, you and the rest of your team and the rest of you at United Capital are a little bit dovish in some of your outlook for the new year. On the macro side, if you're looking at oil prices between 60 and 65, that's not significantly different from where we're finishing off the year we finished off 2019. In terms of headline inflation, even though we're heading towards 12%, you're still looking at about 11.5%. That looks a little bit of middle of the road. If you look at your GDP expectation, headline inflation, even on terms of GDP, you believe we do below 3%, about 2.3%, consistent with some of the forecasts that we've seen on the street, with the exception of the Nigerian government that believes that we're going to have a much higher GDP outlook. So what underpins these key parameters, inflation, GDP, oil price for Nigeria in 2020, in your view?
Okay, thank you, Boasen, and I'll take it from, the oil price, which is more global. We think the fundamental issues driving oil prices, they are not expected to change significantly in 2020. And we've seen that with what Saudi Arabia-led OPEC did as of December. Saudi has decided to take a huge cut, one, to support prices, as well as support the valuation of its recently listed Saudi Arabia Aramco. As far as trade and the rest of what is happening globally is concerned, there's a mini deal between U.S. and China. We think the fact that the president of U.S. is looking at the second-term bid may support his outlook for, speeding up agreeing with China and some of his allies. And that might support trade going forward. Brexit's more or less out of the way. There should be a bit more clarity. So we are not seeing, oil price is very difficult to forecast, but the fundamental issues suggest the fact that the largest demanders, consumers of oil in the global space, they are slowing. And then suppliers are cutting output. So that might keep oil prices at between 65 and 60. In terms of our dovish outlook for macro variables in the local economy, yes, the government is doing a lot, and we acknowledge that. We think they are positive, but we are not seeing their impact significantly affecting these variables in a way that will improve significantly in the short run. Maybe in the medium to long term, we might start seeing the kind of outlook we have. Take the inflation rate, for example. When you have this kind of reform going on around your border to support domestic production, you can't increase supply within that short period of time. So prices will be elevated, and that will affect your food basket, and it will affect food inflation. When you have an increase in liquidity in the system, that affects how people demand for items like FX. And, that can as well affect your core inflation. We saw that in November number. So if you put that together, 11.9% is what we are seeing on the average for 2020. I can't remember which other variable you mentioned again, but I think you mentioned GDP.
Yes.
What we think will continue to happen to GDP is a situation where, these reforms continue to support, the key sectors in the economy to improve gradually, but not at a very fast pace. Take the services sector or the non-oil sector, for example.
Yes, I want us to move on very quickly because yes, you spoke about this report talked about what you call the central bank's framework of a heterodox policy mix, which you folks at United Capital says will be sustained until conditions necessitate policy normalization. At what point in 2020 do you think the central bank and the Monetary Policy Committee will sit down together and say, look, we need to pull back a little bit, we need to change tack moving forward in terms of this unorthodox policy mix that we've seen full-blown in 2019?
I mean, I think for the CBN, what we've observed they are doing is what works and what doesn't work. I think, the CBN has tried to make a use of the MPR in the past, keeping it at 14%, dropping it to 13.5%, aggressively buying OMO to see what they can do. But I think what they've realized is that going via the route of targeting the specific areas where you can affect the key variables works better for them. And what they've done is to segment the OMO market, for example, separate it into the banks and FPIs, and then leave out the rest of us. And they've realized that they can easily affect market rates, which will bring cost of borrowing for government to a level that is very low. It makes it easier for government to raise funds. It also makes it very easier for private issuers to come to the market. We are very excited about that because it simply means that for our investment banking business, for example, domestic corporates can come and probably refinance some of their debt that they took as double digits, at a low double digit or a single digit. We are excited about that, and we think it's positive for the economy. It depends. I mean, it's very difficult to tell specifically when the CBN will revert, but we think so long as it continues to work, the CBN can sustain it. On this whole OMO thing and separation, we think once system liquidity is at a decent rate, probably between August and July, there might be some tweaking, later this year, because we think that liquidity, should change around July and August, because the bulk of what was issued last year happened between January and August. Specifically in Q1, more than 2 to 3 trillion were offered to FPIs, and we saw an upsurge in the size of FPI inflows into the OMO money market that period. So we think the CBN will look at all of these issues specifically and see what step they can take at every point in time. But we think the story might be broadly different in the second half of the year compared to the first half of the year.
We'll have a bit of an elongated conversation with you, but a quick one. Your views at United Capital is that Nigeria's capital flows will see no significant change in 2020 unless a few things happen. What would you like to see happen to change the current low-level capital inflows?
Okay, so what we've seen as far as capital inflows is concerned is the fact that FDI has remained very, very muted. FPIs is flowing majorly to OMO money market, and to equities is been dwindling. What has also been growing is loans and credit from the foreign market. We think so long as conditions in the global markets remain the same, we will continue to see a lot of people take foreign loans, and that segment will increase. If foreign investors continue to see uncertainty within the currency market, if there is no, a clear pronouncement around, whether we'll harmonize it or not, I think foreign portfolio investors will favor OMO purchase, especially given the fact that the CBN have realized that they can preserve the external reserve with the use of this. And if the rates being offered to OMO remain at, double-digit 13%, foreigners might not be interested in the local equities market. So, that's a little bit of a snag and a concern for us. So, except, a situation where that OMO sale at 13% changes, we might not see a reversion to a situation where the demand for equities in place for money market instruments. And except there's, some more clarity within the key concern for FDIs, what we'll continue to see,
yes,
is a situation where foreigners prefer credits to, FDI, which is more long-term.
Well, Wale, you're doing the opening call for us on the show today, so stick around to the final lap of the program. Thank you, Wale Olusi, Head of Research at United Capital. We're back to you at about 10:45. President Buhari spoke extensively about the construction industry and infrastructure. So how does that pace into the construction sector and cement-making business in 2020? Right after the break.